Good morning, everyone, and welcome to Saturday morning. It's Stephen Whiteside here from theuptrend.com. Well, typically I don't do videos on Saturday morning, but yesterday turned out to be a rather memorable day for the market. We've been watching the market to see if it would hold the recent lows, and those lows broke yesterday, so it's probably not a good sign for the market going forward. Now, we've been watching bonds move lower over the past month or so, and of course, that is helping push bond yields higher, which is putting upward pressure on interest rates across the board. And that is working against the Fed that wanted to start to lower interest rates, but that's probably not going to happen going forward. Now, looking at a weekly chart of bond yields, you can see we are coming up to the highs from back in 2023, and it'll be interesting to see what happens at that point. If we continue to break through and make higher highs, that's probably not good for the stock market, but we'll just have to wait and see. Now, with those higher yields, the US dollar index continues to move higher against other currencies. The Canadian dollar, which has been in a downtrend for quite a while, is holding up fairly well compared to the Australian dollar, the British pound, or the euro, or the Swiss franc, all moving lower against the US dollar on Friday. Now, if the Fed's mission is to fight inflation right now, Friday was not a good day for the Fed. Higher commodity prices can help the Canadian stock market, but they can slow down the economy. And so here we've got crude oil moving up nearly 3.5% on the day, back up to the highs from last October. We had natural gas up nearly 5% on Friday, making a new high for this move. We saw money come back into gold. Gold was up nearly $25 on the day, so we're heading up towards the highs from back in December. Then we had a big spike in the price of corn on Friday. We had a big spike in soybeans, and we saw cattle make a new high for this move. So meat prices might be moving up over the next month or so. And at the same time, your underwear might cost less with the price of cotton making a new low for this move on Friday. Now we've got the VIX back on a buy signal, and the VIX has been elevated for a while, but using our charts, it hasn't been on a buy signal for a couple of weeks now. So here we are, we're back on a buy signal. That, of course, is negative for stocks. We talked about the fact that the VIX has been elevated and quite wild over the past couple of weeks, compared to how it moved back in October and November. Remember, October is when we expect a lot of volatility, but that didn't happen last year. And so here we are in 2025. We've had the VIX moving up, and it is back on a buy signal. That, of course, is negative for stocks. Now, one of the reasons that the VIX has been elevated for so long is the overall stock market peaked in late November and has been trending lower ever since. The overall stock market, of course, doesn't include Nvidia, Apple, and Tesla, which have been holding up fairly well. And of course, those stocks by market cap are the majority of the stock market right now. So the average stock has been moving lower, but those big cap tech stocks have been holding up fairly well. And we'll take a look at that in a minute. Now, one of the things we've been watching over the last couple of weeks is, can the Russell 2000 hold those October lows? And here we are on Friday breaking down below the October lows, so that's probably not a good sign. We were watching the 218.75 level, and here we are breaking down below it. To get back on our feet, we'd need the Russell to break out above 225, and it's probably not going to do that on Monday. Now, looking at the overall market again, if we look at the S&P 500, it's been holding up fairly well because of those big cap tech stocks. If you look at the equal weighted version of the S&P 500, where every stock has the same ranking, you can see that we've been in a downtrend through the month of December and into January, and we hit a new low on Friday. Now, look to the left, and if you follow along, you will see that we are now back trading at levels we haven't seen since early September. And so that's quite a dramatic loss since we peaked back in late November. That's what the overall market looks like when you take away the weighting of those big cap tech stocks. Now, the Dow does have Nvidia in it, but that hasn't stopped it from selling off since early December. And here we are making a new low. We're still holding those October lows. We haven't broken down below the late October lows for the Dow. Now, looking at the S&P 500 itself, which includes, of course, the weighting of those big cap tech stocks, It's been on a sell signal for a couple of weeks now, and here we are making a new low on Friday. But certainly, we still have that open gap to deal with. We'll have to see how the market deals with that this week. Looking at the NASDAQ, holding up much better than the rest of the market at the moment. It flipped on Monday. It generated a buy signal on Monday, and then we came back hard on Tuesday. And here we are on a sell signal making a new low for this move. So when you look at the NASDAQ, there's a high, there's a lower high, a lower high, there's a low, a lower low, and there's a lower low. So very bearish chart pattern for the NASDAQ 100. And then there's the Magnificent Seven ETF. Again, you can see it's holding up much better than the rest of the market. When I talk about the rest of the market, here's what bank stocks look like. And so let's go back to the Magnificent Seven ETF. It is developing a very negative chart pattern here where we made a high, a lower high, lower high. We made a low, a lower low. And now this week, we'll have to see if we make a lower low for the Magnificent Seven ETF. Now, U.S. banks moved down over 3% on Friday, and they are currently holding the low from back here in late October. Insurance companies, on the other hand, broke through that low on Friday, and of course, they have exposure to what's going on in California right now. And of course, insurance companies have insurance companies. Those are called reinsurance companies. And here we are with Berkshire Hathaway moving down sharply on Friday. It was down just a little over 2%, but for Berkshire Hathaway, that is a very big move for that stock, which is usually fairly stable. There we are coming down to the lows from late October. Now, the Canadian banking sector is currently holding up better than the U.S. banking sector. You can see we're on a short-term sell signal here, but we haven't broken down below the December lows just yet. And of course, unfortunately, on Friday, with the downward pressure on the market, the iShares for the TSX 60 are now back on a daily sell signal as of Friday's close. Now, we're not being hit as hard as the U.S. market because of the rise in commodity prices. And of course, commodity stocks are much more important to the Canadian market than the U.S. market. And here's the energy sector moving up, closing up another 1% on Friday after making a new high for this move. Gold stocks did move higher on Friday, but reversed and closed slightly lower on the day. Now, if you're involved in commodity-related stocks, it's important that you need to separate the stock from the commodity itself. When there is massive downward pressure on the stock market, all of the stocks are going to fall, even if commodities continue to move higher. Now, your commodity stocks might not fall as fast as the rest of the market if your commodity prices are continuing to move higher. But at the end of the day, when people have to sell stocks, they will sell all the stocks. And if your stock is included in a major index where ETFs own that index, as the ETFs sell off, they will sell off your stocks as well. So just because gold continues to move higher does not guarantee that gold stocks, or if crude oil continues to move higher, it does not guarantee that the energy stocks will continue to move higher when the stock market is selling off. Now, of course, upward pressure on interest rates has put downward pressure on home builders, and real estate stocks on both sides of the border made new lows on Friday. Now, one final note before I go, I'm always prodding people to take money off the table at regular intervals, to have a plan, to sell into strength. And, the old saying is that the stock market typically moves up like an escalator and falls like an elevator. And Rigetti Computing is a great example of that. A couple of days ago, it was up nearly $22. And here we are trading down below $9 at the moment. So quite a dramatic move to the upside and to the downside for this stock. And hopefully you locked in some profits along the way. Okay, folks, that's all for today's presentation. I will be back on Sunday to look at the weekly charts and to do a presentation for our weekly subscribers. You have a great day. Enjoy the rest of the weekend. And if you're a subscriber, next time you'll hear my voice is on Sunday.
Thanks for tuning in until the very end of today's stock market timing educational video. If you found the content valuable, don't forget to express your support by hitting the like button, leave a comment, sharing with your friends, and subscribing to our channel for more insightful updates. Remember, in the world of stocks, timing is crucial, and following the trend can be your greatest ally. If you would like more information on how we can help you better time the stock market, please visit theuptrend.com.